好快佢嘅時候間，佢哋可以 start 咗先。
你要翻啦。
好，得唔該。
Hello. Hi, Anthony. How are you?
Good, Melanie. How are you?
Good, doing well. Thank you. Okay, do you think we can get started?
Yeah, we can.
Okay, perfect. All right. Okay, well, welcome everyone to your second session for adaptive training. Today we'll go through the rest of the training for the other models that we did not go through yet. That including that being COGS, variable expenses, cost center planning, and allocations. Most of it is pretty straightforward. I think the most time that we will spend is in COGS. But before I dive in, I wanted to ask if there were any sort of open questions from the last training that we did. If you wanted to ask, we can dive into that now if you prefer.
Not at this stage. I think
Okay.
we will have problems or questions right after we did the we test the system. And
Okay,
we actually use it. Yeah.
Yep, that's fair. All right, so I'm gonna jump right in. As you may have noticed, I changed the meeting time to end at 9 p.m. Or 9 p.m. my time. I guess it would be 10 a.m. your time. I don't think we'll need more than that, but of course, if we do need more time, we can put some time on the calendar for us to discuss. But with that being said, I'm going to go ahead and share my screen and we can dive into the training. All right, so like I said, we're going to spend some time in standard COGS. We're going to talk about standard cost. And then also all of the remaining parts, other COGS that also gets picked up in the cost of goods sold. So I'm going to switch over to the adaptive screen. Sorry, 1 second. Let me move this over. Okay, so we are in adaptive right now. And we're going to move into the Sheets folder. We're going to move to the top level. Always, again, make sure that you are in the top level, except for those exceptions that I will illustrate later today. Of course, if you're working on the forecast, you would want to be in this working forecast version. And then once you're in the top level, you would then go to this sheet called standard cost rates, standard cost. So click into that. And here for the levels, we want you to go into this level called top level only. This is where the data will be collected for COGS for this standard cost area. I'm going to move the company sales org here. So 8,000 would be a relevant company for you. Is that correct? Is that correct, team? Is company code 8,000 a relevant company code here? I just want to make sure that we're using one of your company codes.
Please try to use 8120.
8120.
Yeah.
Got it.
Yep.
Okay, perfect. Thank you. Thank you, Pam. Okay, once you've selected that, then for your standard cost, you want to let Adaptive know where exactly you are planning these costs, if it's the domestic business or if this is related to the direct import business. So we will leave it selected at domestic. and then we would select a material that is relevant here. Is there a material number that we can use? Maybe one that you use often? Maybe one of your top materials.
STM. Can you try to use STM hyphen?
STM.
1000. Yeah, hyphen 1000.
Okay.
Helena, 我们有没有这个号码？是 CN 还是什么？
This one here, ST, is it the one ending in CB or?
Yeah, CB. The CB should be fine. Yeah.
Okay, great. All right, so once you've selected all of your parameters here, then you can see that this is open for you to plan in. The standard cost GL accounts have been listed here. You will have an opportunity to plan for other COGS accounts. This is just the ones that roll up into the standard cost. And so that's why we have a separate sheet here that we are providing you with. So here you're going to just enter the rate for each of these cost types. And does this, I know for some of the business units, these were all not relevant. Maybe they were using one of these. I believe is the 510001 was the most relevant for the different, we have the same for tariff rate, for run labor rate, and so on. So if there is a specific line item that you would like to use as a test, we can do that now.
Pardon, is this meaning that we need to input the standard cost from SAP to Adaptive? You mean that we need to just like our SAP material master, right?
Well,
or
for
this for P&L.
Yeah, let me clarify. So for actuals, you won't, this will be pulled in from SAP. You don't have to put anything in. For budget, because we will have the budget in SAP this year, you are entering the budget into SAP, and the rates are in SAP. We can pull the rates from SAP. So you don't have to do this for budget either. When it comes to forecast, we can use the budget rates for forecast as well. The only thing is if there are adjustments that you need to make in your forecast for the cost rates, then this is where you would do it. And I would suggest that you either do a manual upload in an Excel spreadsheet into Adaptive, or if it's just one, maybe one cost account that needs an adjustment, you can key it in. You can it'll have rates in here already, and then you can just overwrite it. Let's say, for example, you want to change it, you can do that.
This the variance, the movement, or the finalized amount.
These would be the finalized
amount. Oh, okay.
This is the finalized. This is not the delta. No, it's not the delta.
It's the delta. Oh, understood.
Yes. And so you would enter the rates here as appropriate. So I'm going to put in maybe some examples. I don't know which one would be the most relevant here, or if there's anything that is more relevant than the other. But for purposes of just this test,
maybe you just use one item for testing. For testing.
Yes.
Yeah.
So we'll do this run labor rate for 510001, and we'll save that, and we'll remember the material here. I always encourage that if you're working in Adaptive to leave the like one sheet open, and then we will open up another tab here. I'll show you how to do that so that you can go back and forth and check, you know, if you need to toggle between the two tabs. So the next step here, once you've entered your rates, or let's say you've done a manual import of your, like a mass import of your standard cost, and you can see them displayed here. Then what you want to do is, so what I usually do in order to open up another tab is I click on the menu. My next sheet that I want to open is Revenue and Standard Cogs, and I'm going to right click and open it in a new tab. So that way I have now two working sheets that I can switch if I need to.
Oh,
So now,
I understand. Yeah.
So now that we're in the Revenue and Standard Cost sheet, we are going to navigate to the same parameters that we entered in the standard cost, so we can check the calculations here. The only thing is, with this particular material that we used, I don't think that we have test revenue entered for this material, so we'll have to enter it now. STM-1000 would be okay, and I want to, what division is this in? This
09.
09, okay. Okay, and let's do you want to use a specific customer here for purposes of illustration?
Yeah, maybe you can choose a Sam's Club.
Sam's Club, okay. Which of these is the relevant one?
Good question. They're the same.
Second one. The second one.
The second one. Okay, let's do that. Okay, before I move to the right here to distribution channel, I just want to address this. So we are not in the right level here. We need to go to the profit center level. I'm not sure. This is something that for some of the finance directors, they were not sure. Like they don't work with the profit center as much as they do with the materials. So they do not always know which profit center it is that corresponds to the material that they're working with. I'm not sure if you are aware of which one that is, the profit center. So I can open this up here. I'm imagining we're in Cuisinart. This says control base. Yeah. Do you know which profit center this will?
Yeah, it is the steamer.
The steamers.
steamer.
Okay.
Yeah.
Okay, perfect. Okay, so it should be this one.
Yeah.
Cuisinart, material selected. The sold to level is selected. We have Sam's Club. And then we want to, and then wholesale is relevant here, right? For the distribution channel?
Yep.
Good. And then also plant would remain as domestic.
Yeah.
So as you can see, there is no unit sold for this. So we want to enter unit sold and the price so that we can calculate or have here some gross sales. So I'm going to do just 1,000 units. 150 is the unit price. I'm going to save that. Okay, and then you can see here that now for this material and this customer combination, we have entered gross sales amounts of 150,000. So what you can see is where we entered a cost rate for this account. We've entered this cost rate. You can see that we have now a calculated value for standard cost cost for this account number. Adaptive will calculate that for you based on the rates that you enter. Any questions there before I move on?
No, it is okay. Thank you.
Okay. Yeah, and just keep in mind with a mass upload of the data of the units sold, the price, and then also your rates, you will have all of this populated by material, by customer. So it's really just checking the forecast and making sure that your rates are accurate, that your unit sold is accurate, and as well as your price. And then obviously all of these calculations are going to flow into the P&L, and you can validate that way as well. So now we've gotten through your standard cost, but there are some other COGS accounts that you can enter as well. We're going to navigate there now. So that is, you can find that in this other COGS new sheet. I'm going to open that in a new tab. And here you can see that your profit center is kept here because we've selected it. Adaptive knows that you've been working in this profit center, so it will automatically populate this for you. Just keep in mind, if this is not, you know, take a look at where you're working so you know that you're entering data in the right place. Of course, you can change it here according to what you need. But if you're working in the same profit center, you can see it's already been populated there for you. So these are, this is the list of the other COGS accounts that you can utilize in order to build or adjust, I should say, your forecast and your plan. So in here, you would just put in the amounts that you are planning for this profit center at a total level. So I can see that you have some actuals flowing through here in these two accounts. So I'll just enter some data in there in those two accounts. And I'm going to save that. Okay. And now when I go back to my revenue and standard cost sheet, I'm going to refresh the sheet. You can see this arrow, the circular arrow here. Refresh the sheet, and you will see that in the oh, sorry, actually, this is we've left a note here to signal where you should be looking at your other COGS, because your other COGS are inputted inputted here. You don't have calculations in this sheet. This sheet is mostly more for calculations checking. So we're going to run the P&L for you to see your total cost calculated. And what I did was I went into my reports section, going into shared. One second. Okay, and we're going into revenue and COGS. And then once you're in revenue and COGS, you can see that there's a list of different reports available to you. You can look at the gross margin report in order to show you. Oh, no, not gross margin. We're going to go into. Yep, let's go into gross margin here. Sorry, I want to make sure that I'm touching all of the points on the training. Okay, and then here you will see in the December 2022 where I have done the forecast update, you can see your 21,100 for your roll up of your 510001 account, which is this calculation, right? The 21,100 here. And then you will also see the account for 510032, as well as this 510051 that I've entered here, 1,000 and then 2,000 here. So you'll see the total COGS amount of 24,100, and then the calculations for your gross profit. Any questions there? Okay, very good. And then the other report that we have available as well is the standard COGS detail report. So this one is in the revenue and COGS section as well, and it's this last report down here. So in this report, let me just select my time period, working forecast. The plant I want is domestic. You can run this for total at any point, like just leave it unselected. But if you want, I'm going to leave this as is so that you can see the roll up of any data that's in there right now. So in this standard COGS detail report, we have the accounts that have been populated with data. Like I said, if you want just the total for 8120, you can select the company code, but then not select the customer or the material. Or if you want to just look at a specific customer and material, you can do that. I forgot the material number. STM. Okay, I'll rerun that. Oops. Let me go back. Okay, here we go. So you can see the amount that was entered, and then let's run this for the material. Yep, you'll see the material number, the material amount calculated here. And then you can select also the by customer as well if you want to see that. We're looking also for to do maybe some drill downs into like customer, for example, but that's something that hasn't been, oh, they must have done it already. So this is the customer roll up. So once you are in, let's say, let me go back. So when you run the report with all customers selected here, if you want to see what customers are making up this account cost, you can right click the blue line and then go into customer, and then that will give you the customer breakout of what accounts are making up those totals. Of course, this report is downloadable. You can download it to Excel. And you can also create reports based off of this template by saving it as, creating a new version of it, And then you can either use it for your own purposes or you can share with the rest of the team. Did we go through, I've done a few of these trainings with other business units. Did we have an opportunity to go through that, how you can save it as and share it?
Yeah, please, Melanie.
Okay, I'll show you how to do that. Okay, so the way to do that, if you like this report and you say, okay, I want to save this report as my version, and then maybe edit it so that you can create other things on top of it, adjust it, whatever it may be. Maybe you want like a quarterly, not a monthly breakout, but a quarterly breakout. You can do that with any of the reports that we have available in the reports section. What you would need to do is go to this little drop down next to the save button, save as. And then what you would do is, what I suggest doing is leaving this first section of it so you know where the report came from. And you can just add to it. So version 8120 or something like that. I'm not going to save this now, but you can rename it so that it becomes your version. You can add a description if you want. There are options of doing it in Excel, downloading it to Excel, or it can just be an HTML report, which is what we're looking at right now. You can save it in a different folder of the shared report section. And then the other thing is, I wouldn't select this. This is to disable the parameters, which is the selections on the top. But what you can do also is you can either save it for yourself or you can save it and share it to your team. Okay, so that means you've created another version of this and now your team has access to this report within Adaptive. So you would click that button and then follow the instructions, but it's pretty straightforward. We are going to do further ahead. We are going to do a training on how to create your own reports and how to edit the reports that are existing here. But this functionality is really convenient because once you go into that edit button, I don't think right now you guys have access to do that, but eventually you will, right? You can actually create some reports yourself from here. Let's say, for example, you are looking to compare planning version 1 versus planning version 2. So that could be, I don't know, a February forecast versus a March forecast or something like that. You can create that kind of reporting here. So so that you can use it. Like if it's a report that you use constantly, then you can absolutely create it here in Adaptive and have easy access to it. Any questions there? No? Okay, good. So I'm going to move on. This is pretty much all of COGS. I want to reassure you that we will fully support you in the mass uploads for the data once we get to forecasting, if we need to do some mass uploads into Adaptive so we can get your base started in Adaptive. I'm almost sure that for the February forecast is going to be pretty close to budget, and so we may have some leverage there, but of course you do have the support from me and from the rest of the team in order to do your mass uploads into Adaptive and be able to do that. And quickly, let me just show you how you can do that. So within this menu button here, there is an integration folder. And when you click on the little arrow here, there's an import data option under manual import. When you click on it, it will take you to this section where you can say, all right, I want to either upload actuals, which is actually going to be automated by us. So you don't need to worry about uploading actuals. But let's say you say, all right, I want to upload my forecast, right? You would select plan. You would select which version of the plan you want. So let's say, for example, it's budget 2024, or it's one of the forecast months that we will have coming up. We always will be working in the working forecast. So you would select working forecast here. You would go, you would tell Adaptive where you want to import into. So what you would do is, let's say for rates, for COGS, you would click this button here and then look for the sheet that contains that data. That is the one that you're looking for. So I'm looking for this rates standard cost sheet up here. So I'm going to scroll down and look for that sheet, rates standard cost. And then once I've selected that, I can tell Adaptive, give me the template, right, that belongs to this import so I can start filling it out. So you click on this download template and you can see immediately you're given a file that you can use. So when I open that file, the first tab will be your instructions, is pretty straightforward there. And then the second tab is where you're going to be entering your data. So your accounts, let me navigate over here. So your accounts in the template relate to these are your accounts over here. So this FOB cost rate, and if you can see this floating text that's here, this is the account that would need to go into Excel. So it would, oops. Okay, that's not working. But it would basically be the text that appears in this sc.fob_cost is what would go in here if you were entering this account number. And then your level is going to relate to this, and so on, right? All of your selections. So you would just tell Adaptive what you want to enter for these selections. So it's very straightforward. I am actually working on getting everyone the templates into a SharePoint folder so that you can access all of the templates directly from SharePoint, and you can start filling out. And I also have some examples in there so you know what you should be filling in, what you can leave blank, and what specific data needs to be in what format. Okay.
Melanie,
Yes.
the mass upload template you just show us for the cost, do we have to input SKU by SKU, or we can, do we have to do one template for each SKU, or we can include all SKU in one mass upload template and then do the upload?
Yeah, you can enter all of your SKUs in one template.
Can you go back to the mass upload template for example, for the standard cost?
Yes, absolutely. Let me see here. Yeah.
So okay, so under the material code, right?
Yep. So your material is going to be here. Your material number.
Where could that material code need to tie into to match the material code in Adaptive, right?
Yep, that's right.
Which I think is not exactly the code in SAP, because right now when we saw for example, STM 1000, I think you have some prefix, STM 1000, control base, etc., right?
So what you would enter here is the STM-1000 CB. That's what you would put in here.
Okay. And this one, where does Adaptive get this code? From SAP or from where?
Yes, correct, from SAP.
So pretty much when the country needs to do the upload, they just download whatever material code they have in SAP and put it here for all the SKU, right?
Absolutely. And you don't need to put, you just need the codes. You don't need to put this.
Right.
You don't need the plant name. Wherever it says name, you don't have to put that in. Just with the code, like you need you will need the account, you will need the level code and the sales org code. You need the plant code, the material code, and that's it. And then obviously the amounts for the corresponding months. Like obviously this would change to whatever needs to be.
When we talk about the amount here, are we talking about the unit FOB cost or the total FOB cost?
For the material?
Yep.
Right.
It would be the unit cost by month.
Okay, so we just copy and paste because we assume it won't change frequently. So pretty much whatever the latest FOB cost we have, we just copy and paste here for the rest of the year, right?
Correct.
Whatever, depending on the country's assumption anyway, if they know.
That's right.
Okay, so that's the way. So this is for the forecast, right?
Yes, that's right. For budget, we're following the same process as last year. And then eventually we will be putting in the budget from SAP into Adaptive.
So what you mean is, because definitely by end of Jan, all the country will have the 2023 budget input in SAP with all the details, right? So so definitely the corporate or you or your team would do the mass upload, copying all the 23 budget details into the Adaptive. Am I correct?
Yes, that's correct.
So so every country, they should expect all their 23 budget detail by customer, by SKU, whatever the budgeted selling price, budgeted FOB cost they have assumed in 23 budget that they have input in SAP would be automatically shown included in the Adaptive, right?
Yes, that's right. The only exception, Anthony, is that we only in Adaptive, we only have top 20 customers.
Only top 20 customers. So and then how about the rest? The rest would be other.
The rest would all be in one line as all other customers.
For the top 20 customer, is this by a company code or by the whole entity for Cornea?
This would be by the company code.
Yeah, but I'm thinking about we have, of course, we have the top 20 customer details in Adaptive for 23 budget, but I'm thinking about when they need to do the forecast.
Yes.
They need to update in the Adaptive for the top 20 customer, but for the rest of so-called the others, what they're going to do, because by the end of the day, when they do the forecast, they have to do the by customer, by SKU, the unit selling price, the FOB cost, etc. for the rest of the year, right?
Yes.
And then, of course, they have to, for example, I assume they have to control total for the total revenue and total cost for each month. So they have to do the manual calculation, like the balancing figure should go into the other.
Yeah, it would be lumped together.
So there's no way we can include all the customer that the country has budgeted for in 23 budget to be uploaded into Adaptive. Is that possible? Because I think because from the country perspective, they really do the planning or the budget or the forecast customer by customer. Of course, sometimes they have so-called a dummy, but most of the country they really do the projection based on by customer, by details. And so if whatever they have in budget, when they do the update forecast, it would be much effective if they have what they have budgeted for by customer, by SKU, and then they just revise whatever the estimated sales and estimated cost and estimated quantity in Adaptive in order to get the revised total or the latest total or the latest forecast. But if we only include top 20 customer and then everything go to other, I just worry by the end of the day they have to do something of Adaptive first before they put it back into Adaptive, because they have to do it customer by customer. For example, for example, for China, they have 40 customer. They have all these budgeted in SAP in 23 budget. And when they do the forecast, definitely the best way to do it is based on the budget, 40 customer they have in total. Each customer, they revise each customer's SKU, sales quantity, selling price, FOB cost, if they need to change. Then they update customer by customer with 40 customer, then they get the total. That's it, it is done. But if only top 20 customer including Adaptive, what they need to do is by the end of the day, they have to do the detail forecast or update the detail forecast for top 20 customer first. But on the other hand, they still have to do the rest of the rest 20 customer details or the forecast. And then they get the total, and then they have to add up. Okay, the top 20 is this detail we upload into Adaptive. The rest 20, I have to add it up and put it back to Adaptive as other. So that means they can't avoid to have a off Adaptive Excel file to do their forecast first before they can complete what they are required to complete in Adaptive. That's what I worry about. So if Adaptive can include all the customer, for Asia, we are not talking about huge, definitely more than 20, but definitely it's not huge. And if we manage to have that flexibility, I think it would be much easier for the country to do the forecast, because all they need to do is they go into Adaptive, look at the latest forecast. For example, the February forecast, the latest estimate in Adaptive would be the 23 budget details with all the customer they have included. And what they need to do is just update customer by customer, the sales quantity by month, the selling price that they expect to change in which month, they update it. And then the FOB cost will be the same, because pretty much will be the same for the rest of the year. They do it customer by customer. After that, the whole thing is done in Adaptive. We have to update the forecast in Adaptive. So if we can have that flexibility for Asia country, I think that would really helpful. Otherwise, they have to follow whatever they are currently doing. They have an off system Excel file first. They have to do it manually, and then after that they do a manual adjustment and then put it back into Adaptive.
Yeah, I understand. And are there many other customers outside of the top 20?
Yeah, I think maybe 30-40 customer, I would say. So it's not huge, definitely not huge, but I think definitely most of the country they have more than 20 customers. And when you talk about active, definitely they are active, but in terms of size, of course, there are certain customers that would be more important, but still, I mean, those customers with less revenue, they're still active customer for the country. And definitely when they do the budget or forecast, they can't be set. They have to do this, customer by customer.
Okay, and unfortunately, that was something that was already sort of decided strategically, that we would only put in a top 20 customer budget in Adaptive, because that should represent 80 or maybe even more than that % of the business within any specific company code. So it is by region, right? You're not going to have top 20 customers for all of Asia, but it really would be company code by company code. So company code 8120 would have top 20 customers, and company code 8130, just to make something up here, would have its own top 20 customer budget as well. So corporate has decided already that this is something that we have to implement for each of the entities. And what I can do is I can provide just so that you are aware of what customers were entered here as top customers for each of your company codes. I can send back the list that was provided before. I know that this was several months ago, so it may not be at the very top of mind here, but I can provide you with the list for the top 20 customers for each of the entities within your region.
Then how about if you know, when they do the budget, for example, 24 budget or 23 forecast, they have new customer, which is maybe very critical, which becomes more important than the current top 20.
We would adjust the top 20 list to represent and to include the whatever new customer is now critical for this business.
Well, and then you have to take out one of the top 20.
That's
one
right.
of the existing top 20.
That's right.
Is this only maintained by US, or we can select any 20 customer managed by ourselves?
No, this is going to be maintained by FP&A.
Your team?
Yes, in our team, yes.
Oh, understood. Thank you.
Yes, and they're very limited access, so it's not like, you know, you will only have one point of contact. If you need to update something, it would really be myself. You would send a message to me, and then we can work on adjusting that list for you. So it's not like you have to figure out who is going to be doing that maintenance for you. Okay.
Yeah.
So I know that that's sort of an area there, and it could be, Anthony, that we may be able to change that policy going forward, but I can tell you from what we will do this year is and it has been for everyone across the board, it's top 20 customers only.
Sure. Yeah, I
Okay.
think please consider that, because right now I think it to us, I mean, we expect Adaptive could replace all the manual work we are currently doing for the forecast or for the budget, all the Excel files that we are working on. And I think that's what Adaptive is created based on, right? It's based on what Adaptive is created.
Yeah,
So,
absolutely, for efficiency.
But now with only limit to top 20 customer in the Adaptive, definitely we are just in between.
So if I'm able to, so if I provide the list of what your top 20 represents for each of the regions, and then you would build out that bottoms up plan for the other customers, would that help? So that you have a decisive
definitely, that will help.
line?
At least we know which top 20 customer we need to focus on. And I think that means by the end of the day, if we try to fully utilize Adaptive, when the country come back to do, for example, 24 budget, they have to do budget for top 20 customer. That's it, and then the rest they just put a balancing number in so-called the total others. And I think that's the only way. I mean, for the country, I mean, to try to fill into the setup in Adaptive. But like I said, currently they are, you know, based on their local market, they know how many customers they are active. No matter what the size is, as long as they are active, they would do the budget or forecast
bottoms up
by customer, by SKU, and anyway. So I think please let us know by country for Asia which top 20 customers are selected, because by the end of the day, we will ask all the country to, first of all, to probably to adjust their current local Excel files by only top 20 customer and balance, and the rest, which is the balancing number, and then it tie back to the budget. And then based on that, then they have to do the monthly rolling forecast based on that, forecast the
Okay.
top 20 customers details, and then again, they have to find a way how to determine so-called the rest, the balancing numbers, which I will assume the total, the rest of others, all the countries create a so-called a other customer in Adaptive, and then they just, because I think by the end of the day, for that other customer, they have to work out the average selling price, average FOB cost, everything is average, and input it into Adaptive, right? Before they can roll it up.
Right, exactly. Yeah.
So yeah.
Okay.
Yeah.
Let's continue discussing on this point. I will send you the list, and then let's see what sort of efficiencies we can create.
Sure.
But I think this will be a continued conversation. As of this moment, we'll work with what we have, and then we will see what we can do. Okay.
Sure. Thanks.
Okay. Yes, absolutely. Okay. So just taking stock of the time. So it's about 8 minutes left, and I don't think we'll be able to get through everything here. Perhaps if I can share my screen here. So the trainings that we have left are for variable expenses, which I would consider will be the most important here. And then we do have cost center planning. And then lastly, we have allocations. I would say for cost center planning, it's very straightforward. Let's jump right into variable expenses. Let's see if we can get through it, because cost center planning is very straightforward, as well as allocations.
Yep.
Okay. So for variable expenses, really what we're going to be focusing on here is your commissions, freight out, and your royalties. So again, you want to make sure that you are in the top, sorry, actually for this one, this is one of our exceptions. So you're not going to be in top level. You're going to be in this level called system, which will allow you to select your rates sheets for commissions and freight out, which is based on customers. And then also you will be able to access your rates for royalties, which is based on materials. Again, this is also noted here in the manual, so you want to make sure to follow the manual until you get very comfortable with the steps in Adaptive. So in your commissions and freight out, very, very simple and straightforward here. So we're going to be leaving the level at system. We're going to be selecting the entity that this is for. So let's continue with 8120 as our example. You would select your business unit. Let's leave it at Cuisinart. And then here we want to select a customer. So let's go with the Sam's example. Okay. So once you're at the lowest level with this would be the lowest level of detail. That's where you would enter the rate for each of these accounts. So I'm going to, just for purposes of an example here, 2% and 4% for freight out. I would then save this. Okay, and then we're going to do the same thing for royalties. So I'm going to open up the royalties sheet. Again, I want to make sure that I'm leaving the level at system. I'm going to select my company here. Leave the business unit at Cuisinart. And for the material, we're going to use the same material that we've been using. Okay, so do you calculate your royalty, or do you have royalties, I should ask? Do you have any royalties expense?
Yes,
okay.
Yes, we do.
Okay, do you, so here we have two methods of calculating royalties, because there were differing methods for the different business units. Which is the method that you use? Do you use gross sales minus returns or
net sales?
Net sales. Okay, got it.
Yeah.
So you would enter your rate here is what you would do.
5.5%.
5.5?
Yeah.
Okay, very good. So I'm entered that and save it. Okay, and then now that I've entered my rates, what I want to do is open up. So I'm going to go back into Sheets because right now it's showing me all the sheets under system level. So I want to go back into Sheets. Oops, I meant to. And we're going to switch the level to top level so I can see the other sheets available. And under variable expenses, now you can see that you have this commissions and freight out and royalties.
But
so we're gonna
these royalties for the external royalty only, because we need to pay the Cuisina royalty after the operating profit.
Okay, so
yeah.
but are you
the GL
planning for
was 80136 something.
I'm sorry, say that again, Pam.
The corresponding GL account for the royalty for Cuisina should be X01356. X01356.
Yeah, Melanie, that means we have two types of royalty. So first of all, royalty is pretty much determined by brand. So depending on which brand we are selling, we have different royalty rate. First of all, secondly, depending on the brand, we book the royalty expenses in different GL account.
Okay.
So for the third party royalty, yes, it would be under. It would be under the variable expenses, under the variable expenses, and then for the so-called the intercompany brand like Cuisinart.
Oh, I understand.
It would be in another GL account, which is start with GL account, start with 8. So we need to cater for that. We need to cater for that. Yeah.
Got it. Perfect. Yeah. No, I understand. Okay. So let's deal with the royalties expense that would roll up into variable expenses.
Okay.
And then I can show you how to plan for these other account, the other income and expense accounts.
Yeah, sure. Can we set up the royalty rate by brand instead of by SKU?
By brand.
Because I mean, there's no need to do it SKU by SKU because definitely every SKU would tag to a specific brand. And then if we set the royalty rate by brand, it would be much less work, I guess.
So within variable expenses, yes, you would have to select the SKU.
Okay.
Okay. For the other royalties expense that you described, that would be, you can use, I believe, a cost center in order to do that.
Okay.
Is that how you do it today, using a cost center?
No. Today we because every SKU would tag to a specific brand, so we don't have to do that. We just have the SKU, and then we know the brand, and then we know the royalty rate. I mean, first of all, when we talk about the Excel file we're working on, when we do the budget.
Oh,
when we talk about the SAP actual, it will be automatically calculated because in SAP when we set up a SKU, we have to tag that SKU to a specific brand. And then in SAP, we set up the royalty agreement in SAP. Whatever SKU under this brand, it would be this percentage royalty. It's like the VS brand, for example. When we set up VS on a hairdryer SKU in SAP, definitely we have to put in which brand this SKU relates to. And then once we set that up, every time and then we also have the VS brand royalty agreement set up in SAP. So every time when we sell a VS brand product, the system would calculate the royalty automatically. So we don't have to worry about so.
And it puts it below the line.
Put it under variable expenses.
Oh, this is for variable expenses.
This is for variable expenses. So
Okay.
yes, you're right. In terms of it is still calculated SKU by SKU, but in terms of setup, it's much easier in SAP because we just set up the agreement saying, okay, VS brand royalty rate would be, for example, 4.5% or 4.75, whatever. Instead of, we have to do a setup for each particular SKU, because actually the royalty percentage is actually controlled by brand, not by SKU.
I see.
Sorry. Because when we set up the material master, we have the function for the volume rebate group, and then when we set up the new material, then we need to use the volume rebate group to mark the corresponding brand, just like we does assume VS, and then after do this, we will set the agreement for the volume rebate group VS to make the corresponding percentage to calculate to use the SAP agreement to project into the account directly.
Okay, so I will take this back to the team. I think that it might be something that we can enhance in the system, where what you can do is enter the royalty rate by a higher level.
Yep.
Yeah, by the brand. And I'm not sure exactly how that translates into the material attribute that we have here in Adaptive, because we have profit centers and then we have materials that are related to those profit centers. So I don't know if you're doing it like if a brand means a specific profit center, and I don't think that would be the same, correct?
Not is the profit center, because profit center has to be locked by product type or function.
Exactly.
It's different dimension. Yeah.
Yes. So I think right now with what we have set up in Adaptive, you wouldn't be able to do it by brand. And we would have to actually, what we would do is we would tag, actually what we can do is that might be a simple solution. We can tag the SKUs with a brand tag, so that in a separate sheet, maybe you can enter your royalties based on a specific brand tag, and then that allocates to those SKUs, and the system is doing that automatically for you. But that would definitely be an enhancement. It's not something that we're able to do today. And we can look into that. But for the moment, what I would say is you can get the SKUs that are related to that brand, and then upload in a mass upload what those royalty rates would mean for each of those SKUs.
We cannot only use the brand, because they have some item that we may pay to royalty. For example, they have some just like the mirror curve item, the TFV. For example, this related to the VS band, then we also need to pay both royalty to TFV and without soon for both royalty. That's why in our SAP Material Master, we will have the current field called the volume rebate group to set a just like the key, and then use the key to log into the corresponding royalty agreement to set the percentage currently in SAP. We cannot only rely on the brand.
Okay. All right. So I think, Pam, we'll need to explore this a little bit more, so I can see.
I can show you the details in SAP later. I will send an email to you.
Okay, that sounds good. Yeah, let's explore that a little bit. So for right now, though, we do need to, what we have available is the royalties calculation at the SKU level. So let's discuss it. Let's see how you're able to use it in the meantime, and then we'll work on a solution for the long term.
Sure.
Yep.
Okay.
Maybe you could use another product, the example, and another item. Do you want to use another item, VS item, to see the external royalty, to show it to us? Do you want?
Well, right, we would have to enter the other components like sales. We would have to enter all of those test data in order to get any calculations here. But when we have this conversation to like learn a little bit more about that process, we can take one SKU and do a whole example with that one. Okay.
Okay. Yeah.
Okay, so what I wanted to illustrate here is the calculations that we've entered for commissions and freight out. So first of all, let me go into the SAMS customer, and we also want to go into steamers.
Steamer.
Let's see, now I forgot which one. Let's see. 8120 should
This
be
one,
this
yeah,
one.
yeah.
Okay, perfect. Okay, so here you can see that we have gross sales amounts. We have our gross to net down here. So we have a total net sales amount of 188,000. And then you can see that the calculations, the rate that we entered here of 2% with a calculated commissions amount of 3,760. And then the same thing for freight out, we would have 4% here and the calculated amount of 8,000 based on net sales. I'm sorry, actually, for freight out and commissions, I believe those are based on gross sales. And then let me go over to royalties again. We'll have to explore this a little bit more and figure out how to provide you with a solution that makes sense for your business. But within here, just based on what we have available to you right now, you would enter whatever material is relevant here for royalties. You would see that you have a gross sales amount of that amount, 150,000. You selected the rate method 2, which is based on net sales. So your royalties rates of 5.5% gives us a calculation of 8250 there. And if you go down to the lowest level, you'll be able to make changes. Actually, not for, sorry, royalties is not related to the customer here. So sorry for that confusion. So you want to remain here and materials. So this is pretty much the entire training for variable expenses. Again, let's discuss what is different for your area. I will, Pam, if you can send me that information, and then we'll set up a call so that we can discuss further.
Yep.
Thanks.
Okay. Yes, and then do you have a few minutes just to go over cost center planning?
Sure.
Okay. Yep. Okay, great. Thank you. Sorry that this is going on now longer.
No, sorry for keeping you late.
No, it's fine. It's fine. Okay, so luckily cost center planning is very, very straightforward. So we have two options for you to be able to plan your cost center amounts. Let's go into Sheets. We're going to go to top level here as well. And then when you scroll down, you'll see a section called Cost Center Planning. So the two options, or they're not really options. They're used for different purposes, but you have two different ways that you can plan your cost. One way is this OPEX for marketing expenses. But really what I like to call it is a way for you to track your expenses here. So if we go to a cost center, I don't know if you can think of a cost center that you would like to use. So I'm going to select the first one that's in here, if that's okay. So you would select your cost center, and then what you can do is add a row. Here, you would enter the, let's say, for example, I'll give you the example that I have been giving the other business units. Not sure if this is applicable to you, but for trade shows, for example, we want to track the expenses that we have for trade shows. So we would put in a description for that expense. We can select a GL account number. So we can select the GL account number that we want to track in, and then you can also select the vendor that this is related to. So you can, you can say, okay, we have this expense and it's going in this GL account with this vendor, and these are my amounts forward, okay? So this is one way that you can do it. And let me show you the other way, because I think the other one is probably the most useful. We do have this for like the business units that want to track their marketing expenses. But then we also have this. And this is planning operating expenses by vendor. So you again would choose the cost center that's relevant here. And then you can plan your expenses by vendor. So you can select the vendor that's relevant here, or you can do vendor uncategorized, which means no vendor selection. You just want a general amount in that GL account. Okay, so if you just have a GL account that you want to put forecast for expenses, whatever this may be, we have all of the fixed expenses accounts listed here for you. And you would just put in the amount that is relevant for this cost center and GL account. We wanted to add this feature because if you wanted to track expenses to a specific vendor that you want to keep an eye on, you can do that as well, but you don't have to.
Yep.
Okay. I'm going to go down here. I just want to make sure I'm not missing anything that was super important. Yeah, so the only other thing that I want to show you related to cost center planning is within reports. You can go to your shared folder, and then you have in the revenue and COGS section. No, this is not right. Hang on one second. Sorry, not revenue and COGS. It's in the operating expense folder. There's this OPEX plan report, and this report will allow you to look at all of your, this is not, we didn't enter any plan data for 8120, so I'm going to use the US test data to illustrate it. So you would just run this report, and then you can see all of the expenses. These are actuals, but this December 2022 would be plan data. You can see the roll up of the GL accounts. You can also right click it and go into cost center attribute, and that's going to give you all of the cost centers that are collecting the expenses for this GL account, the group of GL accounts here. Okay, any questions there?
No,
Sorry, I know that that was very quick. But that's pretty much, it's a pretty straightforward entry sheet. Like it's a matter of just entering the amount by GL account. So it's very straightforward, very simple. I would say that please use the run books, the instruction manuals. They're very helpful to take you step by step. And of course, if we need refresher trainings or anything that we need to do to support your team, we can absolutely do that.
How about the number of vendor? Is this only 20, or we just ignore the vendor as well? Is this necessary that we need to input by vendor?
You don't need to enter by vendor. You don't. If you leave this as vendor uncategorized, it will not be applied to a vendor.
Understood.
Yes.
Thank you.
Okay. The very last training that we have is for allocations. And this is for any expenses that you want to reclass from one cost center to another. Is this something that is applicable in your area?
Yes, for certain country.
Okay.
But on the one hand, we don't have a very systematic or proper way to determine the allocation percentage. So right now it's pretty much manually done for reporting purpose.
Okay. But you do have like one cost center is
we try to do that.
Yeah. Okay.
Yeah, we try to do that.
Okay. Well, we do have this allocation sheet, and again, you have the run book, so you can see how to get there and exactly the steps. But if you I'm going to put this at top level here, and then how you would enter this is you would add a row. You can ignore what's in here. That was just a test, but you can add a row, and here you can see there's a sender cost center. So you would select one of the cost centers within your area. I forget which one was the one that was relevant to you guys. But you would just select a cost center that's relevant to you, and then select the receiver cost center. So maybe this is a cost center within another affiliate in Asia, and you would select whatever that is for purposes of just demonstrating. Here you would select that cost center, and then here is where you would select the allocation GL account. So in the US, we only have these GL accounts that take care of our allocations. So this is what we use in order to manage our allocations. Do you use these GL accounts? I'm imagining that you don't.
No, right now I don't think we are using these accounts.
Okay, so what would be helpful is if I can receive a list of maybe the GL accounts that you're using in order to journal your allocations from one cost center to another.
No, we don't. Actually, like I said, we don't do that. Actually, we when we post a journal, we already split the cost. If we want to split the cost among different cost center, we already did it through the journal. So we are not doing a kind of a standard allocation from one cost center to another cost center. No, we don't do that.
I misunderstood.
Exactly. So when we do the journal entry for certain expenses, we know we need to allocate into different division. Then we already do it when we post the journal entry. So it's not like a. So we put it that way. We don't do any systematic allocation currently.
Okay, so but you would have this available to you if you wanted to start using it.
Right, but again, this is just for reporting purpose. Even for the adaptive, I guess this is also for reporting purpose, right? Because
that's right.
Everything is really, the journal is really actually posted in SAP. So so if we want to do this when we do the reporting, then we can set it up here.
That's right. Yeah. And so yes, your actuals would already be reflected in SAP.
Yep.
And then for your forecast and your plan, if you want to reflect those allocations in here, I would say just maybe select a GL account that you would like to use in the future, and then we can see if we can set this up so that you have a mechanism to do your allocations if you wish to. If you want to continue, for forecast, I imagine that you would just have it in a specific GL account for the determined entity, right? Yeah. Okay. Yeah. So I'll leave it to you. If this is something that you want to explore, then please let me know, and then we can figure out what GL account combination you can use.
Yep.
Okay. Yep. Perfect. So any questions before we wrap up?
Probably not, I guess, not until we actually have to do the work. I think we have, I think all of us, we have some idea about how Adaptive is working and what need to be set up. But on the other hand, I think we will have more questions for you or for your team when we are actually using it for the forecast or whatever purpose.
Yes.
So bear with us. I mean,
yeah.
when all the countries are being required to use Adaptive to do the forecast, I think it might take a lot of time for them to get used to it and really get used to how to use Adaptive.
Yeah, no problem. That is totally understandable, and it really is the message here, Anthony. I've been communicating this to all the locations, really, like have patience with us, really, so that we can support you in the best way we can. We are trying to deliver a system that is helpful to you, right? So as we we continue, we will try to improve, evolve, make this even better for you and the team, and we'll work together to make that happen.
Absolutely. Thank you, Melanie.
Yeah, my pleasure. And I hope you guys have a beautiful day.
You too. Have a good night, Melanie.
Thank
you very much for your time.
Take care.
Take
Absolutely.
care.
My pleasure.
Thank you.
Bye-bye.
Bye-bye. Bye-bye.
Bye-bye.